Is the crypto market sending a subtle warning that almost everyone is completely missing? There's a strange tension in the air, a quiet before a potential storm. The daily charts are whispering secrets, painting a picture of profound indecision across the board. After another full cycle in the market, we find ourselves at a critical juncture, waiting for either a spectacular surge or a dramatic plunge. It's a moment where strategy becomes everything, a time to either seize the opportunity of a dip or simply enjoy the exhilarating ride upwards. The indicators are flickering, the patterns are forming, and the big move feels closer than ever. The question is, which way will the tide turn? And are the signs already there for those who know where to look? A closer examination of the market's undercurrents reveals a deeply complex and divided landscape. A snapshot of a significant portfolio, valued at around $2.4 million, illustrates this perfectly. While the overall position might see a slight increase one day, perhaps by $100 or $200, the next can bring a downturn of $400 or $500. This volatility is driven by the starkly different performances between asset classes. The equities portion of such a portfolio, representing maybe a sixth of the total value at around $400,000, can experience significant hits. Names like Alibaba and LHX might face downward pressure, with only giants like Amazon showing resilience. Even high flyers like Nvidia, while still up substantially overall, aren't immune to daily pullbacks. This divergence between legacy markets and the digital frontier is a crucial piece of the puzzle, highlighting where the real pressure and potential currently lie. Within this volatile environment, a calculated strategy begins to unfold, focusing on specific assets that show long-term promise. Recently, a significant move was made into Ethereum, with an initial $10,000 allocation into an Ethereum mini fund, followed by another. The first entry, timed during a dip, is already showing a modest gain. The second, made just a day prior as part of a dollar-cost averaging DCA process, is slightly down. Placing these two positions side by side allows for a fascinating real-time observation of how DCA performs in a fluctuating market. The choice of funds is deliberate, targeting those with the lowest possible management fees to maximize returns over time. This brings the total exposure to Ethereum to $20,000, a starting point in a much larger strategic deployment of capital. This methodical approach is designed to build a substantial position without trying to perfectly time the bottom of the market. The strategy for navigating Ethereum's turbulent waters is both simple and disciplined, a systematic dollar-cost averaging approach triggered by specific price declines. The initial entry point was around the $4,600 mark. As the price action unfolded, a period of intense observation followed. Instead of buying the bounce, the approach was to wait patiently for a deeper retracement. When Ethereum's price fell to the 4,470s, another $10,000 was deployed. The timing, just off the 13-day exponential moving average, appeared sound. However, a critical warning sign is now flashing on the chart. If Ethereum breaks below this crucial 13 EMA, the situation could turn ugly very quickly. A daily candle closing below the line in the sand at 43.75 would be a major bearish confirmation. Such a break would likely trigger a much deeper correction, sending the price down to retest the major support zones between $4,075 and $4,100. Conversely, if the 13 EMA holds, as it has done so many times before, a powerful bounce back up is entirely possible. The chart structure still resembles a classic consolidation pattern, a coiled spring waiting for a breakout. The bulls have maintained control for now, but the situation is hanging by a thread. The long-term game plan is clear. Continue to layer in capital with each significant dip. For every $100 drop in Ethereum's price, another $10,000 tranche is ready to be invested, provided it occurs during market hours. The most attractive area for more aggressive buying lies further down, near the formidable 50-day exponential moving average. That's the zone where position sizing would likely increase. The overarching goal is to have all allocated funds transitioned back into the crypto market before the end of September, with a small buffer extending into early October. This timeline is not arbitrary. It's positioned ahead of what are expected to be major market-moving announcements between October and December. It's a straightforward strategy, but its effectiveness hinges on market structure holding. Should the 50 EMA be decisively lost, the entire thesis would need to be reevaluated. But for now, with only $20,000 of a potential $700,000 deployed, the risk is carefully managed. The plan also includes continuing to add to positions in XRP and perhaps a small strategic allocation to Bitcoin, aiming to secure at least 1 or 2 full coins. Shifting our focus to XRP, the chart tells a different, more convoluted story. The pattern forming is not clean or aesthetically pleasing. In fact, under normal circumstances, it would suggest an imminent break of its foundational support. However, a glimmer of hope persists. Despite the bearish pressure, XRP has consistently carved out a series of higher lows, a subtle sign of underlying strength. The key battleground is the 50-day EMA. If it can bounce off this critical support level and finally break through the overhead resistance, a powerful run could be ignited. The Bollinger Bands are tightening to an extreme degree, signaling that a period of low volatility is about to end and a massive price move is imminent. The direction, however, remains a mystery. The prevailing trend since the highs of July has been undeniably downward. This bearish sentiment is compounded by the looming shadow of September, historically the most challenging month of the year for the crypto markets. This, combined with persistent liquidity concerns involving the Treasury and the Fed, makes a cautious, slow DCA approach on major red days the most prudent path forward. Looking closer at Bitcoin, we find what is arguably the most concerning chart of the 3 major assets. The titan of the market is displaying clear signs of technical weakness. The critical 50-day EMA has already been lost, and a candle confirming a close below it has been printed, a significant bearish signal. The 13-day EMA has crossed below the 50, another classic sign of weakening momentum. After a wick down to the shocking level of around $108,000, the price bounced back only to be rejected squarely at the 13 EMA today, and it is now pushing back down. A new line in the sand has been drawn at $110,400. If a daily candle closes below this level, the path of least resistance appears to be sharply downwards. The first stop would be a retest of the recent low at $108,300. If that level fails to hold, the next logical target is all the way down at $105,700. There's no ambiguity here. The short-term outlook for Bitcoin is decidedly bearish, with a clear sequence of potential support levels to watch on the way down. When you place these 3 narratives side by side, a clear hierarchy of strength and weakness emerges. Ethereum, despite the immediate risks, presents the most robust-looking chart. It continues to hold above its 50-day EMA, with its daily candles fighting a healthy battle between the 5 and 13 EMAs. Its relative strength index, RSI, is still strong at 54, suggesting it has plenty of fuel left in the tank for another powerful rip to the upside. At the opposite end of the spectrum, Bitcoin looks the most vulnerable from a technical standpoint. And caught in the middle is XRP, trapped in a tense equilibrium, a perfect coil of potential energy that could break violently in either direction. The market is speaking, but in 3 distinct dialects. One whispers of resilience, another warns of weakness, and the third speaks in riddles. The ultimate direction remains shrouded in mystery, but the clues are all there, waiting for the one catalyst that will finally unravel the truth.